Hey guys, we're going live. I think I'm at my 15 seconds. I was heard I was counting too fast. So just giving everyone a time to come in. Welcome to Lunch and Loans with your loan officer, Loans by Natasha, MLS number 332074. I'm coming in today to talk to you about non-traditional funding. So if you saw my video, and if you saw some of the marketing, we have a lot of individuals that can't get approved because they don't pay taxes. So today we're going to be talking about bank statement loans as well as DSCR loans. So come on in. We're going to give you guys a second to come on in. Feel free to ask any questions. There are no rules. There are no such thing as bad questions. Hello, Facebook. Hello, Instagram. Hello, YouTube. We are live on all channels today. So just bringing you in a short lunch and loan if you're on your break, having a snack, just taking a few minutes to invest in you. We're going to just drop some gems on you during that time. So once again, I am your loan officer, Natasha Robinson, NMLS number 33274, and welcome to Lunch and Loans with Natasha Robinson. So once again, we are going to talk about our bank statement loan overview, another option where you can purchase a home. To all my beauticians, to all my barbers, to all my self-employed individuals, you own a venue, an inflatable venue, whatever your business is, and you get a tax refund, that is a good sign that you have not paid enough taxes. If you are not paying enough taxes, you are not reporting enough income. But if you are self-employed, you file your taxes, you're receiving income, and you're not getting those nice credits I keep hearing about, then you probably don't make enough money for a regular mortgage. However, you always want to consult with a licensed loan officer, have them look at your first scenario, right? Because you're going to get lower interest rates and lower down payment with the first scenario. However, this is an option for you, just slightly more down payment and slightly higher interest rates, right? So once again, feel free to tune in with any questions. What is a bank statement loan? It is a non-QM loan for self-employed borrowers, okay? So you have to be self-employed. So if you are just someone who just inherited $1 million and it's not on any type of pay structure where you're getting consistent income on a regular basis, this loan may not be for you. So they're going to be verifying that you have been in business for 2 years at least. And then you're going to utilize your bank statements as your income in lieu of your tax returns. Okay. What does that mean? If you deposit every month three $10,000 deposits, and every 5 months, maybe you drop in 80 grand or something like that. If we don't have consistency, we're going to throw out the larger deposits. And generally, they take about 80% of your deposits for the month over a 12-month or a 24-month period. Now, we have a 12-month bank statement loan option. However, we are going to have a slightly higher interest rate on that. The longer the history, the better the deal is for you. So if you can do 24 months, it's an option. But if you can't, we do have bank statement loans as an option over the 12 months. This is perfect for any business owner, any freelancer, and 1099 earners as well. So that way you can utilize your business, right? Everybody doesn't get a W-2. You may be an Uber driver, and you are filing your income, but then you're writing off all your gas, your car note, some other stuff that your accountant may have added, and now you have negative income. If you're not paying taxes to the IRS and you make a lot of money, this is going to be a good program for you. And I do want to disclose, I am not a licensed CPA. I don't give accountant advice. I don't know whether you should be filing it or if you should not. All I'm telling you is that if you truly make the money and you have the deposits, I can get you into a bank statement loan by using the deposits that you make every month on a consistent basis as your income to purchase a property in lieu of having a W-2 or a regular pay stub with a regular job. Yeah, so now we're going to talk about loan structure. So on the loan structure, we have a fixed rate, we can have an ARM rate, interest only. We have all different types of options. I get a lot of clients that want to purchase in a LLC. On these programs, they do have a little more options for you to be able to purchase in your business name, because guess what? They know you're a business owner and we're treating you with income as a business person. Whereas on my regular loans, we don't really allow you to purchase in an LLC. We do allow some trust, but for you to get a bank statement loan or to put it in that LLC, you're going to look at that bank statement or that DSCR loan. We can go up to $5 million, guys, on these grants. $5 million. That's awesome and amazing. And I said grants. I'm sorry, I've been on the grant roll, but we can do $5 million in this loan structure on a bank statement loan. You can have a credit score as low as 660. So on my regular FHA loans, you can have a score as low as 540. I don't recommend buyers buy at that score. 10% down, 580 is 3.5. You really want your credit score to be at least a 660. Why? Because after you own a home, you may incur other expenses. And we want to set ourselves up for financial freedom. And good credit equals financial freedom, because we're now purchasing things at lower interest rate and more bandwidth, and we have more money to move around, right? Our debt to income ratio, debt versus income, if you make $1,000 a month and you have $500 in debt, including your new mortgage, you would be at 50%, right? So they allow you to go to 50%. And you can use this program for a primary home, a secondary home, or an investment property. So the sky is the limit for you in this transaction. Yes, you can be an investor, or you can do owner occupied on this program. So keep that in mind as well. Personal bank statement qualification. We talked about it. We're going to request 12 to 24 months of consecutive personal statements. If you must be self-employed for 2 years or in the same line of work for 2 years. You may not be self-employed. You may be a loan officer, a licensed loan officer, and you're getting a 1099. That's considered self-employed, even though you didn't have a business license and things like that. So as long as you can document that you received this money from a company, or you have a business license to support that you own the business for 2 years, we can get you going in this loan, right? All account holders must be on the loan. So if you have a bank statement, and that's a tricky one, and it varies with different banks, so we could talk one-on-one. So if you are on the bank statement with Charles Watson, and Charles Watson is not going on the loan, and you and Charles deposited $30,000 in deposits, well, guess what? 29,000 could have been Charles' money, and 1,000 could have been your money, which is why everyone that is the deposit holder on the bank account must go on a loan, because we don't know whose deposit is what. We're just looking at deposits. So with that being said, keep that in mind. If you're thinking about doing a loan like this, you got your kid on your account, or you have some special arrangement, you want to make sure that your main source of deposits for your business or for your source of income is 100% yours, or 100% those individuals that are going to go on the loan. Okay. Self-employed narrative form. You want to make sure that we're going to have that. That's a form that we work out for you within your loan process. You must show stable monthly deposits. If you have a deposit for $1 million one time, and then your rest of your deposits are 10,000, I'm not going to count the $1 million, because guess what? That's not something you're going to get all the time to be able to utilize to pay your mortgage. And I will tell you guys, and I tell this to all my clients, no NSF. Banks don't want to do business with people that don't pay things on time or overdraft on time. So if you have NSFs, the bank doesn't want to do a risky loan with you, because that puts you more at risk. So no NSFs. And the way to get rid of an NSF, if you guys don't know, is to close your bank account and start over, because most banks, at the bottom of the bank statement, there will be a button that says total NSFs for the year. So if you had 3 in January and now you haven't had any more, you caught up, you're on track, that history from January in some bank institutions will follow you. So check in with your loan officer under your pre-approval status to determine what makes the most sense for you. No tax returns or P&Ls are required on this program. Yay, we don't have to go through. These are the easiest loans. My bank actually calculates your income, sends it over to me. I pop it in your file, and you're all set. So we're only looking at the income we gave you for the bank statements, and your assets and your credit score. How amazing is that? You don't have all of those strict encumbrances that you may have to go through on a regular loan. This is ideal for my self-employed and non-traditional earners, right? This is what this is for. This is for you. This is for you if you are the hairstylist watching. You've been listening to all your clients talking about, hey, I finally closed on my new home. You want to purchase yours. This is your opportunity. You're going to have to put a little more money down on the property, but you can get into the property, and it is an amazing thing. And if you are self-employed, you may have some other ways with your business through different opportunities to get some more opportunities to help you get some of those funds, right? Get some of those funds back. You're going to be qualifying on real bank activity. So like if I made $80,000 a year and I wrote off my hair appointment, my lease, my makeup, my wardrobe, my office in the basement, my depreciation from my house. If I wrote off all the things that made me be Natasha, I'm very expensive, right? And most of the things that I pay for are most of the things that I pay for are for my business, right? So if I'm somebody and I'm writing off all of those things, I'm not getting credit for my true income. So with that being said, I am actually able to write off um, things on my tax returns to maximize my tax credit and still come back and utilize the percentage of my income without those write-offs, which is absolutely amazing. I'm more flexible on credit and documentation. So this particular program isn't as strict on your credit. We're not looking at all of the things that we're looking at in the conforming world. Why? Because we're working with you on a business entrepreneurship level versus a first-time home buyer. My first-time home buyer may be a little less savvy. They go to work every day, they get a paycheck, they come home, and that's it. So to put the burden on owning a home, dealing with the furnace, paying the property taxes, right? Those are more entrepreneurial type of things. So in this particular situation, we are giving entrepreneurs a little more exposure and experience based on the fact that you are an entrepreneur. So your skills may be a little different from one that's a self-employed. No, I'm not saying that our W-2, and I'm not saying my W-2 borrowers don't have capacity and skills and don't do well at owning because they do, but it's a little more risky for you. Whereas my self-employed individuals coming in the bank statement program, put in 10 to 25% down, they have a little more skin in the game. So it's not as strict. Whereas if you put 3.5% down, that may just be 3 missed mortgage payments. You have less to lose than someone going into a bank statement program, which is why the guidelines and things are less strict on this program versus others. And I don't see any questions yet. And I know this is our short, brief lunch and learn, so I'm going to just keep going here. This is our income calculation example. So if you make $12,000 in deposits, you have $12,000 in qualifying income. Okay. The lender, and they don't have this, we don't have this on the slide stack. The lender's going to give you 80% of that income. So I got to pull out my calculator. But if we were talking 10,000, 80% would be $8,000. That's how much income I will be able to give you per month. Whereas if you had $12,000 a month and you wrote off $12,000 a month, I would have to give you zero income. So no matter what you write off, I'm going to give you a percentage of your deposits. That will be your income. And then that's how we qualify for you. That's how we qualify you for the loan, right? So if you have more questions in regards to that, let me know. And this is going to be a case-by-case scenario. So this is not one for all type of rule. It's going to depend on your profile, your credit score, the way your deposits look. So what we do is we take your application on a soft pull, we submit your file to the investor with the bank statements. The investor will calculate your income. We'll bring it back to you. If we need to challenge the investor, we will, and we kind of go from there. They're going to be looking at how your deposits are going down to determine what we can use and how we're going to calculate them. So this program is not one set of rules for one person. We're going to be doing this case by case scenario, but it is a program that will work out for a lot of individuals. Underwriting summary, right? We're going to take the 12 to 24 month bank statements. All borrowers must be on the loan. Your income must be stable, meaning if you deposit $3,000 in January and not another $3,000 deposit until March, and then you have a $12,000 deposit and then a $1,000 and then no deposit, that's not stable. Stable is every month I deposit between $3,000 and $4,000 a month in my account, and it's consistent every single month with the amount. So I'm doing increments of 100, 100, 100, or 500, 500, and it's my deposits are consistent, as well as my frequency is consistent. So they're going to be looking at that. Everybody on the bank statement has to go on the loan. No NSFs. We don't want NSFs anyway. I had a client that had 8 NSFs every month. We're giving $240 to the garbage that we can use to invest in our 401k. And if you have an employer match, that could turn into $500 and end up being $6,000 a year. So we definitely want to pay attention to that. Deposits must support claimed income. Only self-employed income allows sources, right? So if you're depositing income into your business, then we're totally okay with that. But if we have deposits that says this is deposit is from the IRS for $5,000, we know that's not your client. It was probably a refund check or something like that. So we would be backing out deposits that don't support your business. And I know that was a lot, so Mecca, I just want to make sure we don't have any questions. All righty. My ideal bar for this program is a self-employed borrower, strong deposits, but maybe low taxable income, been in business for 2 years and needs flexible documentation. And also you have a little bit of funds to put down. Once again, you're looking to put about 10% down, sometimes most likely 20 to 25%. So you're coming with a higher down payment, a slightly higher rate. Like, so if our standard rates today are like 6.5, you may be 8.5, 9.5 in this program, but once again, you're owning. And guess what? 10 years ago, people that bought 10 years ago probably have over $100,000 in equity. So if you pay $300 a month more a year for your property that you're able to write off, that's $3,600. So when you're thinking interest rates, think, okay, is the amount of money that I'm paying extra to get in the house worth waiting 5 years because property value is going up? So if I wait 5 years and pay an extra $40,000 for the property, I think I was better off with the $3,600 for 5 years, right? And then I'm also able to write off that interest. I'm able to write off the depreciation. I have 5 years into my current home. So now I only have 25 years left if I'm on that mortgage. So yes, on the bank statement program, it's a little more expensive to get you in there. But once you get in, and you're in the mode to set yourself up for retirement. And then you also have the ability to put yourself in that situation where it's paid off in 30 years versus waiting, continuing to pay someone else's rent. Income tax time is coming in January. So if you were writing off things and you were getting a big refund, utilize that refund to fund your project, put some money away, say, hey, I'm going to do these clients every month and I'm going to build that down payment. So that way you can have the opportunity to take advantage of what we have going on today. If you guys want to, anyone that wants to apply, like if you guys, you can always apply by clicking my link. We do a soft credit pool, meaning we don't pull a hard pool unless the deal works. But we do have a lot of options. If you are looking for bank statement or DSCR loans, you can scan. If you're looking for down payment assistance, a regular FHA, VA, conventional jumbo loan, you can scan. I have all of the programs, including FHA 203K all day. Today, we are just talking about the bank statement loan. So feel free to reach out to me via email. My Instagram is Loans by Natasha, Facebook, Natasha Robinson, and my website, which you can't forget, loansbynatasha.com, where you can do an application, a loan inquiry, schedule an appointment for a one-on-one so we can discuss your next goals. And I hope that we brought a little bit of information to you. I know this is a more complex, a little difficult program on paper, but it's easy. It's actually one of the easiest programs that exists. And we look forward to showing you about it to get to the finish line. So if I don't have any questions, that's all I have today. Mhm. 10 to 25%. It just depends on your credit score, your type of property, your credit score, your type of property, and how many months bank statements we're using. Our minimum is 660, but the higher the credit score, the less money you have to put down. But the lowest that I've seen is 10%. Good question. Awesome. Well, I am Loans by Natasha, your loan officer, coming to you with different topics. I do Mortgage Move Mondays on Monday nights at 6 p.m. It's more borrower focused, a little slower on the information, the basics of kind of how we're getting started in this industry and getting pre-approved and all of that good stuff. And then on Fridays, I switch my days. On Fridays at 12 o'clock, we do luncheon loans, and it's a little higher level conversation, a little more programs once you graduated from my basic portfolio. So you can tune in anytime and feel free to follow me. Tell a friend to tell a friend, and let's do what we can to share all the information to help you more knowledgeable so you can utilize the program to build a real estate portfolio and help build generational wealth for you and your family. You guys enjoy your family and have an amazing day.